All right, back with first trades right here on ET now. Now, Reliance Capital is a stock in focus as well. Results have come out. They've found some suitors as well. So let's talk about all of that with Sam Ghosh. Sam, good morning. Thanks so much for joining in. A quick word on the result highlights, because profit growth is just about 10%. Why so?
So yeah, the profit has grown by 10% to 235 crores for this quarter. The key profit drivers have been from our three or four core businesses. Our asset management business has shown a growth in profits, nearly 140 crores, up about 10 to 12%. And the AUM for that business has obviously grown quite substantially at over 20%, to 1,56,000 crores. And equity AUMs in that is about 51,000 crores, so that has helped increase the profitability, and we expect that profits to continue to grow in this. In the case of our commercial finance business, our AUM's grown nearly 22,000 crores, up over 20%, and profits also up at about 112 crores. Profits have marginally grown up primarily because the fact that we've spent a bit more in terms of setting up infrastructure for our housing finance, so for the low-cost branches, as well as in adding people for the affordable housing segment. Here in the housing finance, we've grown our AUM by about 62% to nearly 6,000 crores, to 7,000 crores rather. And our intention is to grow that to about 10,000 crores, so that's helping. In terms of our third business, our general insurance business also has shown growth of profits by about 5% to 15 crores. Here again, this is also taking into account the fact that there were the Chennai floods, which had about another 15 crores hit. So if that hadn't happened, we had shown a significant increased growth in profits. In terms of gross written premium, the gross written premium was at about 700 crores.
Sam, for the life insurance business, what has led to the contraction in the life insurance profits and premium growth, and outlook ahead on premium growth going forward?
See, on the life insurance business, our focus remains on traditional products, primarily non-participating business, and we'll continue with that. And most of the other companies have been focusing on unit-linked business, so that's why our top line has not grown at the pace that it should grow. However, this is a deliberate strategy, and we want to ensure that we only focus on this business so that our new business margins remain at the higher end. Now, if you look at the market today, with the market conditions, I think on the unit-linked front, you will find that there will be higher surrenders. Whilst in our case, if you look at our persistency, it's grown from 53% to 57%. So we are obviously heading in the right direction. And we expect that if we continue focusing on traditional products, from a retail customer perspective, they are not going to be left to the vagaries of the capital markets.
Right, but the general insurance profits have just grown 5% year on year with flat premium growth. What are the key factors that really impacted the premium growth? And also, could you give us a sense on the outlook of the profits for this business?
See, in the past, we had about nearly 60% of our business coming from motor, about 20% coming from health, and another 20% coming from commercial lines of business like fire, engineering, liability, etc. Our focus this year has been that, okay, on the motor side, we said that let's not focus too much on the commercial vehicle side, nor should we focus too much on the motor third-party standalone products. So therefore, we've reduced that, while a lot of our other competitors have been focusing on that area, and the premium growth has actually happened on the motor portfolio. So we have tried to focus on private cars as well as smaller ticket two-wheeler type vehicles. So that has reduced the focus on motor so much, but growth has happened on the health as well as on the commercial lines. So overall, that's why if you look at gross written premium, it's come down on the motor front, but it's grown on the other lines of business. And that will obviously help in the long term to help grow our profitability and improve our ROEs, which is what the key focus is.
Commercial finance business loan growth has been strong, and so have the disbursements. Which segments have driven growth, and what's the outlook ahead?
See, on the commercial finance business, our key focus remains on the housing finance sector. We have tried to grow that at a significant rate. So though overall AUM has grown at about 20%, but the housing finance AUM has grown at about 62%. So we're at about 7,000 crores AUM. And our focus is that how do we grow that housing finance to over 10,000 crores. The other area of focus remains on the SME segment. On the SME segment also, we continue to grow that. Where we are trying to defocus or have a reduced focus is on the CV, CE, and on the infra side. So we've kept that growth at a much lower rate.
And finally, Sam, what is the growth outlook and strategy for Reliance Capital? Are you also looking out for any other inorganic growth opportunities at individual or group level?
See, our focus continues that we will continue to grow our 5 core businesses, our asset management business, our lending business, be it, and especially in the lending, the housing finance and SME segment, and our insurance businesses. And again, on the insurance businesses, our focus will continue to be on the general insurance, the health side, on the life insurance, obviously on our non-participating traditional type products, and our broking and distribution business. So those are 5 core businesses. Our asset reconstruction business continues to focus on SME and retail assets, and we continue to grow that. And there's huge potential in that field. And on the, as I mentioned earlier, on the commodities exchange, obviously that's another new area for us to grow. So those will continue to be our key focus growth areas. Obviously, non-core businesses will slowly exit in the next 12 to 18 months.